Hi everyone, my name's Brent and welcome to Three Crowns Trading. Please click on the subscribe and the like button below and support our channel. Today we're looking at oil and gas. So let's have a look at some current gas and oil charts and some forecasts for the future for gas and oil. So over here on the left you see the crude oil. This is a chart showing the price of crude oil, and as you can see we had a huge flash crash here early in 2020. And since then, the price of oil has just trended up, and it's trended up significantly. It's at pre-pandemic levels right now. On the right here, the oil price, as you can see, it's forecast to trend down into the future for 1 year into the future. So that's looking a little bit negative from this point in time. Natural gas. So natural gas has hit an all-time high. That has shot up incredibly since the start of 2020. And again, over here on the right, it's forecast to trend down from here over the next year. So what's going on? Why has the price of oil and gas both shot up a great deal very recently? Well, a lot of things have happened. So COVID. Obviously, COVID has restricted the movement of a lot of people, and it's restricted the movement of oil and gas workers. So there's been very little exploration into the oil and gas industry that has occurred since COVID has started, and that's been going on COVID for 1.5 years until now. So there's been very little exploration because people cannot get to the sites. They cannot drill the wells, and as you know, oil and gas, the wells deplete quite quickly. They can, so they need replenishing. So if you can't find new reserves, you're not going to be able to replenish the supplies that each company particularly has. So that supports the bullishness for oil and gas. ESG, so environmental, social and governance. There basically is a huge move to renewables right now, but the world still needs that base load power. So things like uranium has surged a lot now recently too. Coal, gas and oil, because if the sun doesn't shine, your solar doesn't work. If the wind doesn't blow, your turbines don't work. And basically a lot of countries now are realizing that they rush too quickly towards renewables, and now they're left wanting, and they're having a lot of power shortages right now because they didn't maintain their baseload power supplies. The President Biden, so Biden, as you would know, is very positive on ESG. Trump was more supportive of the oil and gas industry. Fracking in the States was a lot more common than it is currently. And so there's not much fracking going on right now. And previously there was too much fracking, and it actually pushed the oil and gas prices down when Trump was in charge. But now there's not enough. So then you've got less supply coming into the market also. Russia. So Russia has gas pipelines they send over to Europe. So they send a lot of gas to Europe. And right now there's a bit of controversy about the second pipeline that they're pushing through, and Russia is not supplying the gas to Europe. So gas prices in Europe are surging for that reason right now as well. Russia needs the gas for itself. Countries are reopening. So as countries reopen, we see an increased demand for oil. We've got aeroplane fuel that's obviously in more demand now with planes flying. People are driving their cars, and so you've got this supply that's under pressure, and you've got an increase in demand. So that's supporting the oil price and the increase in oil and gas price also. Inflation. So as things get more expensive, obviously oil and gas is no exception to the rule. So food gets more expensive, housing gets more expensive. With money, we've got money printing going on, which creates inflation, and the oil and gas sector is not going to be immune to that inflation pressure either. OPEC. So OPEC is obviously one of the biggest conglomerate of countries, and they're still restricting supply. So the less supply and the more demand, prices will increase. Another thing that's happening in this ESG area is oil and gas majors like BP and so many of them, Royal Dutch Shell, are moving out of oil and gas. And in some cases, for Royal Dutch Shell, for example, the governments are putting in mandates that require these companies to actually have less exposure to gas and oil, to polluting products like these. So a lot of them have to move out of oil and gas, and that's obviously reducing supply, and that's increasing the price as the demand increases also. And then there's these one-off things as well. So the Hurricane Ida, which has currently just went through the Gulf of Mexico, has affected supply in the US, and a lot of that is still off right now. So all of those factors together are creating the perfect storm for supply issues for oil and gas, and obviously it's very bullish for the oil and gas price. Okay, so what I've done now, let's look at some oil and gas companies. So here we have 6 well-known oil and gas companies, and what I've done, I've put down their PE ratios. Okay, and as you would know, the higher the ratio, the PE ratio, the worse a company is. A PE under 20 is good, under 10 is very good usually. Debt to equity. So for this particular company, or Royal Dutch Shell, for every $100 they have, they owe $60 in debt. So they actually have quite a high debt to equity ratio. Dividend. The dividend yield, so the higher the percentage here, the better. So this is the money you get usually twice a year, the percentage of your money invested in that company that you get as a return twice a year. And the higher the percentage, the better. And here's some interesting other statistics. So this is the 1-year high share price. This is the 1-year low share price for this particular company. And this is the current price. So if we look at all of these, if I look first at the PE ratio, this is high for me. I don't like PE ratios this high. Exxon, high. Petrobras, Brazilian oil and gas company, that's quite reasonable. But look here, their debt to equity ratio is quite high. That's a little bit scary. Over here, they do pay a good dividend, mind you. Over here, Chevron, too high. Beach Energy, that's quite reasonable. Woodside Petroleum, that's too high for me also. Debt to equity, too high. Honestly, if I look at all these statistics, well, one thing I do also like to see, this is the highest share price in the last year. This is the lowest, and this is the current. I ideally want to see this price, the current price, closer to the all-time low in the last year, not the all-time high. And if you look here, the current share price is very close to the all-time high in the last year. So for me, this share price could move up further in the near future, but because it's so close to the all-time high, I see that as a bit of a headwind for a huge price movement in terms of going upwards. So if I look at all these companies, that's closer to the all-time high, that's close to the all-time high, so is this. This is actually quite reasonable. If I look at Beach Energy, good PE, debt to equity ratio is very reasonable, dividends okay. It's a junior explorer, so generally you find that junior explorers don't have as high a dividend as more established blue chip companies. Its share price is closer to its all-time low in the last year than its all-time high. So in terms of looking at all of these companies, Beach Energy is one that I'm interested in, and I actually do have a position in Beach Energy. If I held any of these other stocks, I honestly would be looking at selling them right now, even though we just went through all those supply-demand graphs earlier, and basically it was very bullish for oil, but remember, prices are forward-looking. So a lot of these stock prices are looking 6 months into the future, and maybe a lot of those factors on this previous slide have been solved. So you're not going to have that bullish push from these sort of factors possibly in the next 6 months. So other things that are happening. So this is an article online, and basically it's sort of talking about the things that are happening in the world and how that's affecting the oil and gas prices. And there's plenty of information online you can find to support your decision to buy a particular company in oil and gas, or to sell, mind you. So just looking at Beach Energy for me, I started purchasing this particular stock around here. I thought it hit an all-time low. If you see this line here, you had the share price bouncing off this support line more than once, and I thought to myself, wow, this is a buy, and I started buying. They then released some bad news and the share price popped down. And then we had another support line here, and I purchased more here thinking, oh, it's bottomed out. It didn't, and it continued to follow the MACD all the way down to here, and I kept purchasing. And this is what's happened now. And basically, I purchased, and now what's happened, the share price has popped above the MACD. This blue line here is the MACD. When you see one full bar above the MACD, that's generally a bullish signal, a signal to possibly buy a stock in this particular company, and that's what I did from here. And right now the share price has shot up a great deal. So I'm looking to sell this now, and here are the sell confirmations that I look at. So what I will do, I will wait until the gap has been filled. This is a gap. There was a big gap here, and generally gaps like to be filled. So when this stock price, when this bar hits this red line, that gap would have been filled, and it'll also hit this line, which was previously support, but that line should act as resistance now. So when that happens around $1.63 or 4, I will sort of have a closer look at this stock and think, should I sell? The other thing I look at to support my decision to sell is the RSI. Down here's the RSI. So when it says oversold, I am generally looking to buy. So I started purchasing this particular stock here, around here. And then obviously we had some bad news. We had a gap down. And then I saw, oh, it's oversold again. I started purchasing here. I purchased here. I purchased here. And then what's happened, we broke through the MACD, and now we're in overbought territory. So when we go into this pinkish area here, that supports my decision to sell a particular stock. The other thing I'm looking at, a full bar crossing the MACD. So right here, we had a full bar crossing this blue line as a MACD, and that's a buy signal. You see we had a golden cross there. So that's a buy signal. Now we're trending up. We had a death cross here, and that's generally a sell signal, and we trended down. We tried to break through here, we tried to break through here, big downward movement here, we tried to break through again, hence my buying. I thought we would break through, didn't happen, but now it's an obvious breakthrough and the price is trending up. The next thing I look at, I just mentioned the death cross. So if this actually starts to turn like this here, if this starts to turn, I would look for exiting here. It should turn down, it may not, but if I'm in a nice profit, I won't get greedy, I won't take a risk. I'll exit this particular stock and I'll look to buy it again in the near future if it comes down and back into oversold territory. So the other thing I look at when I make a decision to buy or sell is buy or sell spreads. So this is a screenshot from my trading platform. And if you look down here, there's 1,100 buyers for this particular stock, and they're bidding for over 9 million units. Whereas there's less than half the number of sellers, and they're bidding for less than half, or around about half the number of units. So there's a lot of support here to push the share price of this particular company up, because there's a lot more people interested in buying this particular stock than there are selling. When this goes the other way, and there's more people looking at selling this particular stock, I will think about exiting my position in this stock. So in summary, and this is not financial advice. I mean, it's up to us all to make our own decisions and do enough research, enough charting as we need to determine whether it's time to buy or sell a stock. For me right now, my thoughts are, if you had have got into the oil and gas industry three months ago, 2 months ago, you would have had some really fantastic gains now. For me personally, now is not the time to get into the oil and gas industry. Now is the time to take profits. And that's what I'm looking to do with the stocks that I'm holding.